Welcome everyone to the Kendall Report. Well, it's Wednesday night. Still have tonight and tomorrow night's videos to go, and markets had another interesting day. But before I get into the content tonight, make sure you subscribe, like, and share these videos and hit that notification bell. And folks, you did a great job last night. We got well over 1,000 likes. Let's do it again today. Hey, it's free. Just hit the like button. So let's talk a little bit about the action yesterday. We saw a follow through on the market. Now, we did get that RTX sell signal and we managed to still close higher. And it's interesting that the patterns we had about, on basis the S&P, about a 50 handle range. So we did see a little bit of contraction of volatility. The title of this video is The Markets to Stall, and we're seeing already, and just in this 5 or 6 days that we come off of this low, I'll go through the details in the technicals here in just a minute, but we basically saw, this, I think it's a climactic rally already. I think we pulled back. We went through a really deep dive. I wish I had time to do it tonight. I'm going to take a listen to that recording of the live room yesterday, and maybe I will put that out and on the internet, just raw. It'll be easy to download and upload. But I went to a deep dive on expectations for the market. So while I'm talking about the market stalling right now, we're talking about maybe a couple day pullback and nothing more than that at the moment, and maybe just finishing off the week, kind of pulling back and maybe settling back after seeing all of the excitement that we've seen. And I talked about that pattern that we saw yesterday, where the market would just stair-stepping up and get the same pattern. It did some of that again today. So it was interesting that we got to that point in as far as the configuration goes again. So yesterday, S&P finished up 0.59, so we didn't get any sideways. We are seeing a little bit of backfilling right now. We're looking at the E-minis down 12, the Nasdaq futures down 58 right now, which is roughly a 0.5 decline. So we're seeing a little pullback overnight. I think we'll see more as we come into tomorrow. But let's just take a look at a couple things that came out. Been talking about how bad housing is. We're looking at home sales down 5.4% over the month. But when we look back year over year, it was minus 14%. Those are national numbers. There's still some hot markets out there, but I do expect to see even them start to fade here pretty quick. We'll see how that goes. Also, after the close tonight, we had Tesla earnings coming out. Last I looked, Tesla was up 1.48% overnight. Nothing big they were able to beat, but they're still in some earnings declines. And, I think that's pretty much what we're going to continue to see. Just a further review of what happened yesterday. Best sectors, mega cap. So it was basically the FANGs are back on. We're looking at the consumer discretion was pretty strong. But I've been watching something, and you folks have seen this too. And I think this is really interesting. I don't know who comes up with this stuff, but the new buzz phrase is that companies are slowing hiring. I know you've heard that they're slowing hiring. And so that's supposed to be negative, I think. I think that's supposed to be negative. I kind of touched on this the other night. I think it's pretty hilarious, actually, that they're just struggling to come up with some narrative that says the economy's rolling over, and they're making up stuff, right? So we're in trouble now because people aren't hiring as fast, but they're still hiring. So like I said the other night, I don't see that necessarily as a negative, but they certainly are playing that card. I just had Bloomberg on a little bit ago, and I heard it 3 times within 15 minutes. I think it's pretty interesting. We come into tomorrow, we've got claims coming out. I'm not sure anybody's looking at this. Maybe they are. Claims are expected to come in at 240K, and the continuing claims are at 1.331 million. I'm expecting to see this this number, actually both numbers start to increase a little bit more than what we've seen. We got Philly Fed index coming out, expected to be minus 1.2%. So it just looks to me that we are seeing the economy slow, but I just thought, watch for this if you're watching any financial media. See how many times that you are hearing that catchphrase. It's amazing how the media works anymore. There seems to have different words or a statement that they all make when they start, or at some phase they have to make the statement. And what happens in the political world, and it also happens in the financial world, and I'm not sure what the purpose is, but everything's very scripted out there across the board in the mainstream financial media and every other piece of media that we have out there. So let's go ahead and let's take a look at the database. I think you'll find that interesting as well. I certainly do. So let's go ahead and take a look at that. So we moved up. Yesterday we were at 72.75. We're now at 75.94. We had 1,253 buy signals and 83 sell signals. So still getting traction. We're also doing something else. We're getting at the extreme that the database goes, and it's going awful fast. So my expectation is that we'll stall in here. We'll start to see some rotation back in, maybe back to 68, 62%. And whenever I see this database ramp up this fast, it always is a little bit of a warning. It's much better if it takes multiple, maybe a week to get here. We did see a big ramp up back in the 2020 and after the pandemic, but this is, we're not at that stage at all. So as far as the database goes, I think we're played out already. Typically 72, 78% is about as far as it goes. I mentioned this the other night that we do sometimes get into maybe into a 85, even 90%, but that was back when everything was hammered down and we had the Fed just pumping money in everywhere. I think it has been interesting because there's been some pretty relentless buying over the last couple sessions. I'm shocked actually that we were able to print all the way to the 39.77 level on the futures today. And like I said, we're pulling back a little bit, nothing big as at the moment, but I do expect to see a couple of days a pullback, and that should set the tone for what I just talked about as far as the database goes. So we have 16,137 symbols in the database. We're 12,254 of them long. So there's 3 out of 4 of these symbols are long already, and it does mean that there's still good traction, and we're probably going to see, and I mentioned this last night, some kind of 5-3-5. Maybe we could extend to 8 days up. I think that pattern is still what we're going to see. Even though we were higher today, I still think we're going to get this couple days back pulling here, and I think today will be key to confirming that pattern. So watch for some of the parameters that I'll show you in just a minute. So before we get into the normal screens, I just thought I'd bring up the indicators and what's going on here. We did see, this is a 5-minute chart on the left hand and a 1 minute on the right hand side. So what we've done is we saw a pretty decent decline here, and then it rallied right back, and now we're consolidating. We're getting some moderate upward targets on the 1 minute, suggesting we could go back to around 53 right now. There's no big targets on the 5 minute. We do have some potential for going down to 39.41. So I want you to watch this 39.41 level as we go through the night. If we get through that, then we're probably going to see some further downside numbers. That's going to be the pivot. Right now, we've got some very moderate upside numbers suggesting 50. We're looking at 55, 57 on the upside right now in this range. So let's go over and take a look at TradeStation. That puts us right now, we're down 10 on the day. That would put us down about 7 or 8. That's where we were a little bit ago. So we did trade down to almost 20 down on the S&P futures, and then they snapped right back. We're looking at 0.39 down now on the NAS futures. So we are seeing a little bit of stability here. And like I've talked about, there appears to be some numbers. Sorry, I had Tesla up there. This is the weekly. Let's get the daily S&P up here, and let's take a look at some of the market grid numbers for today. And we're looking at S1 is 39.42. We've actually traded down to S1. S2 is 39.19. I think we could see a ramp up to the R1. So R1, S2, there is some potential to get under the 39 handle again. And what I'm really seeing set up here, if you look at the PPMs, they're all rolling over all of a sudden. Everything was looking wonderful. We're no longer in trend mode on PPM 1. PPM 2 is hanging on to that, but those levels where that support is 38.70, 38.55. So it's possible we could pull back into those levels, and we'll see when we get there whether we can hold this together or not. But this pattern, and this was something that I talked about, I can't draw it in, but there's basically an ABCXA, and there's a B wave potential down and another C. And really what it ends up being is that we're locked in a sideways range for now, and we could see another 5 to 8 sessions where we're still working this range. We managed to get above it, but we'll see if we can get back into that lower 39 handle, back into 38 over the next couple of days. It looks like the momentum, a lot of times I talk about the VIG, is just disappearing here very quickly. I was shocked to see how they were acting. When we were in the live room today, I was talking about how we were not picking up more momentum as the market was rallying, and this is when we were trading at 60 plus. We're 54 right now, so we're trying to rebound back. Like I said, we were down 20, we're down 850 now on a real-time mode, but no reaction whatsoever today. When the patterns were the strongest, we weren't getting any reaction. So look for two things. One, for a test of the 40-period moving average. We broke through it. 39.08 will be that number. That maps out fairly good to the S2. So I'm going to call potential low 39.19 to 08, and then getting back to those moving averages. Now the moving averages are rising just slightly right now at only 5 handles per day. So there is some vulnerability here. I know everything was ramped up pretty good, too much, too fast. And now we're starting to see this market start this moderate pullback. So watch as we come into London tonight, how we're trading. And then again on the U.S. Open, there really is, like I said, no real major news. Philly Fed, the claims numbers, not sure anybody's watching that. But I do, there are some earnings that are coming out that maybe will have some impact, but I think they're minimal, actually. We're looking at mostly financial and biotechs coming out tomorrow. So I don't see anything that's going to come out of there. I think you're just going to have to watch these technical levels, and I think folks will be pretty quick to react to any breakdown in this pattern whatsoever. And I think that's the main thing to watch here. So I gave you a pivot point off of the intraday charts. So watch that as you go through the night and into early morning. Okay, next we'll go through the Nasdaq. Nasdaq has very similar, but as it was stronger when we were coming off the lows, and I didn't do a bar count, but I'll do it here. This is right now, yesterday was the 5th day up, so we completed the 5-day pattern. We should have at least a minimum of 2 and a possible 3 days down in this pattern. This will be across the board in all these indexes, the S&P, Nasdaq, and the Russell, when I cover that in a minute. But it's interesting that right now we are very close to rolling over PPM1. It's still at a minimum trend mode, 0.23, but we're about to potentially break through the first and second derivative to the downside on PPM1, which would be a negative event. PPM2 is still at a pretty decent number, but that's coming in at 11,900. We're trading 12,420, so we're looking right at 12,000. 12,045 is going to be support, and then below that we're looking the potential going down 11,917. So watch this pattern very closely, because I believe the probabilities on the upside have started to wane just a bit, just because of the way that these PPMs are acting. Now, these indicators gave us a nice view of the markets turning around. I still think on an intermediate to longer term, after a few days down, we're going to resume some sort of uptrend, but it may actually get into a much more complex configuration as we go forward. It may not be simple, and in fact, it's never simple. It's always difficult. And so this pattern is likely to get a lot more difficult and more complex. So our next market we'll look at is the Russell. This is the RTY. They're down 0.34 right now. This has a little better profile. I've talked about this. We've seen that the markets tend to do a little better. The Russell was right at that, up 3.5% yesterday, followed through with 1.4. The S&P was the weakest of the group. And, indexes like the MK, let me just bring this up 1 second here. Like MKG, which is that Vanguard large cap, that was strong. I would look for that to be one of the weaker. I think we're going to see a pullback here, especially with, I don't think the Tesla news was all that good. And I think everything's went too fast, too far, too fast. And now we just need to consolidate. But what we might find out about all of these markets is that there is potential for more testing of some of the support levels. I don't think we get down to the lows, but I do think we get back to these moving averages. Like on the Russell here, you're looking at the back towards the 1746 level, something of that range, maybe down to 1760. That's certainly a possibility, but all of them should come back toward these moving averages. They're still rising slightly. The PPMs are still in trend mode here on RTY. And so we're still in trend mode, but we're seeing that stabilization. So a touch off of the 40, or better yet, trading down to between the 10-period moving average and the 21 would be the best scenario for actually a better move on the upside. Otherwise, we may just retry some highs and get a rejection off of that level. So basically looking at an R1, R2 levels for all of the indexes across the board. So next market, we'll go through the 10-year. 10 years back at 303, and PPM's rolling over a little bit on PPM1, but we're back into trend mode here. But there's a lot of resistance right in this level where we're trading right now. between 30, right where we're trading right now, 304 up to as high as 309. I talked about this high target 314, 316. That is an extreme. I don't think we get above that. And I know we're getting closer to the Fed meeting next week, and everybody's talking about higher rates, higher mortgage rates, all of that stuff. I did go through, we'll see how things trade tomorrow, and maybe I'll go through some more thoughts and concepts on the yield curve as well. But for right now, we're seeing something else that's happening is the yield curve starting to actually steepen across the board. And I think the only thing that hasn't been inverted is the 30 right now. I talked about the other day that it wasn't that bad. Basically, we've seen it move a little bit further from there. Let's take a look at you'll see here the 530s now are inverted again. They're only one tick, but they are inverted. The 1030s are not, and we're definitely still inverted on the shorter end of the curve. And the 210s, my least favorite, but they are also inverted. I believe the 2s are back at 324, and it's almost a downslope. So the 30s are barely hanging on to not being inverted right now from looking at the 2s. And I think ultimately that the Fed's going to continue to move these short end rates up. They're committed to this inflation scenario. They've gotten everything wrong so far. Why not continue to push the short end of the curve up and then get this inversion across the board? Right now, the 13-week is only at the 20, we'll call it 24, 0.25%. So, or 2.37%. And that suggests that we're probably going to keep seeing that move up with the Fed funds and everything. They're going to keep pushing it. They push it 0.75%. I don't think they do 1. We'll talk more about that as we get closer to that event. But it looks to me that ultimately the very, very shortest end of the Fed funds and the 13-week T-bills are going to be higher than all of the other securities. And that's how they're at least attempting to fight inflation. Whether it works or not, we'll see. But I think for right now, that's what we end up looking like down the road. We'll get into more Fed talk as we get closer to the meeting. Next, we'll take a look at crude oil. Crude oil just is stable right here between the 95, 103 level. I've talked about this number for the past several months. Matter of fact, we can go back. This was the lows. If we come way over here, we did print down some lower numbers here. But since that level, we really have just managed to stay around. The worst cases here were 92, 95s. We printed down there. We got one of these bubble bottoms. The PPMs are telling us absolutely nothing. There's still a little downward pressure here to keep the markets down between this 95. We're trading 98, 91. So 95, 92 has been the extreme so far in this pattern. And then 102, 103 is going to be kind of a cap. We're just going to stay in this range. This market's really locked down at the moment. There's nothing really to look for right now. There are some Fibonacci projections down below here, but I don't believe they're very realistic, but I'll mention them. The low target 1, 91, 83, 49, fib target 2, fib target 3, 78. Don't see those numbers coming in play. And we're looking at the 200-day moving average coming in right now at 84.36, and that would be a major buying opportunity if we did see prints down there. But I think we just stay stable here. There doesn't appear to be any big trades either way at the moment. So next we'll talk about gold. Gold was down into the 16 handle. We're looking at, take that back. We got to, the low has been 1705 here. I was looking at something else earlier. We're just seeing a very sideways range here. All the PPMs are negative, in trend mode down. There's nothing here at all. Let me just go over to the weekly. The weekly low so far is 1705. We're trading just below the 200-week average, which is 1733. I think we're going to stay under that. It's almost is starting to look like how Bitcoin traded. And, you know, we just hovered right underneath that 200. And we're seeing a little bit of improvement here on the weekly PPMs, but we're still super negative at minus 0.68, minus 0.52 on PPM 1 and 2. So with those kind of numbers, the trends are very strong, and we're not likely to see any rallies that are going to take out the previous week's high at this point. And we look back last week, that number was at 1760. That's a long ways from where we are right now. And the previous week from that was all the way at 1832. So we're definitely still seeing this trend unfold. We have 3 Fibonacci targets downside, 1682, 1598, and 1547. And the Dow is kind of stabilized a little bit. I'm not going to cover the Dow tonight. I went through a fair amount last night and talking about that. So go back and watch that video, possibly depending on what happens in Thursday's action. Maybe I'll bring it up for Friday as we come into the end of the week. But for now, we're just looking at downward pressure in gold. Nothing to do here at all. I guess you could be short and stay short if you're short for up on this breakdown up here when we got the cycle high. The one thing I will continue to mention here is we do have a potential cycle low coming in this week. Somewhat encouraging, like I said, that PPM1 is cutting through its first derivative here. We'll see what comes out of this. I'll keep a close eye on it as always. So the final market I'll cover tonight is Bitcoin. I've been talking about Bitcoin getting up to the 23.5, 24,000 level. The 10-week moving average, let me bring that over on screen so you can see this. 10-week average is 24,247. We had a high of 24,271, so we printed up there. Didn't know if we were going to be able to get up there. I thought we would get above 2,300. We look at the market grid. 23,512 was the R2. R3 was 23,521, and RXT 24,213. So we managed to trade above RXT. If we close above that, this is Sunday night. We're a long ways from there yet, right? But if we close above that, then that would give us an RTX, maybe a sideways mode. But this is the thing to look at here. The PPMs 1 and 2 are starting to turn. They're still negative, but we're crossing over the first and second derivatives. One more stable week, and all of a sudden, we could be talking about Bitcoin moving towards 29,000, 32,000 here off of this pattern. So we're getting more and more bullish. And even in the downside, when the equities are going down and everybody talking about the high correlations with the Bitcoin and Nasdaq, even when we dipped way down, Bitcoin stayed absolutely stable there. So we didn't get any of that downside to bleed over into Bitcoin at all. Let me go through the daily chart just real quick here. Pretty hard to read because it's so small. Let me blow this up just a bit so we can get a little better look at it. So we're trading up over the 40, and this is the more encouraging formation here on the daily. We got PPM1 plus 0.73 trend mode, PPM2 plus 0.43 trend mode, and the one thing that's keeping us back at the moment is that PPM3, which is still negative by 0.7. So that's going to act as somewhat as a magnet. That's at 22.8. So watch for that to be support on the backside. And as we go through the next couple of days, we're looking at some decent acceleration. We're now seeing the 10-period moving average is rising at about $200 per day. So we're starting to see an upslope. We're starting to see an angle of attack, and possibly we're going to see something we haven't seen for a while. Let me zoom back out here. Is we can go all the way back to when this declined. Let me blow it up so we can see it. Let's just go all the way back to when this decline started. You'll see when it broke below the 40, we've never been able to close above this green line since. So that's been our dominant line. This is the first time that we've been able to get above that level for a long time. And even though we're still negative on PPM3, we are above its first, second derivatives. The acceleration on PPM1 and 2 are suggesting that this market's got more legs on it, and it's going to continue to do better. And I think after all the altcoin, this is just an opinion. I'm not super informed on this, but just as an observer, I think after all the blow-ups that happened, I think folks found out that maybe Bitcoin's the place to be. I know a lot of folks are somewhat negative on Ether. I'm not going to cover it tonight, but Bitcoin seems to have really picked up all of the flow, and I think that's why it stayed stable all those weeks that we just watched it go absolutely sideways within maybe a couple $1,000 range, in spite of what else was going on in the equity world and all the negative stuff when we were printing lows in the equities. Never caught any traction here on Bitcoin. Okay, folks, that's going to do for the show tonight. I appreciate everybody watching. Haven't really looked at any comments or anything. They're no longer in front of me. They're over on the side, so don't get a chance to really read those. But thank you so much. Remember to hit the like button. We got to have a minimum of 1,000 plus every day, and so the YouTube folks will start to pay a little attention. So anyway, folks, thanks again. Remember, these indicators are amazing. You get to come into the live room. We had a bunch of people show up today. So go ahead and get these things, and we'll show you how to use them. Thanks again for watching. I will see you tomorrow night, same place.